Good morning, everybody. Hey, John, JW, Val, Julie, Chip. How you guys doing over there? Hey, Steph. PS, how are you? Good morning, everybody. Good morning. Happy Thursday. It's Thursday, right? Yeah, happy Thursday. Hello, Mike. Good morning. Hey, Gavin. Hey, Gavin, how are you? Hey, for those that, first of all, I want to say thank you so much for those that members that came to the Gap and Trap workshop last night. I really appreciate it. I have emailed the video link to you. If you haven't gotten it, then check your email. I've also posted it in the members app, so you can pick it up there. And here's another place you can get it, right over here. If you know, as you log in to Hit and Run Candlesticks, the website, you log in, and normally you go right here to come to the room. Just scroll down a little bit, and you'll see Members Workshop, and just click on that, and then you'll see it posted right there, Gap and Trap setup and today's date, along with a few other workshops if you want to take a peek at those as well. So anyway, thanks again. Thanks, everybody, again for being there last night. So, okay. So, holy moly. Oh, thought I just saw that pop up. It looks like we're under a little bit of pressure. Good morning, John. It looks like we're under a little bit of pressure this morning from the downside, a little bit of pulling back here. I guess the big question, whoops, where did my drawing to goes? There we go. The big question is, are we going to break that trend? Are we going to stay up there? We are approaching, we're through the T-line right now. We're, of course, down below that. I'll be watching the trend indicator, see if that holds. We also have this gap in here that might get filled. I'm not going to change anything. I feel if I start to change, it's just bad. It just doesn't work out. And what I mean by that is the trend indicator is still green. The trend is still up. If we look at the dark chart, we're still bullish here. I know that here we could do this. I'm going to put the EMA up there, and I'm going to set it on the last price. There we go. So even on the last price, not the high or the low, we're actually still above the T-line. So kind of hard for me to get bearish when it's looking like this. On the other side too, it's very hard for me to get bullish when it's clear that price action is leaning to the downside. So this makes for which direction do you go? And maybe it's just a matter of more information. For me anyway. Other people, maybe rocking something, and everyone's different, and that's perfectly fine. Perfectly fine. So let's take a look at the diamonds. The diamonds have been, they're roaring. I think the diamonds is what's, the Dow is what has really pushed this market up. We broke out, rallied up, and now it looks like we're pulling back. So just extended the trend indicator here, and then put a line horizontally on these candles. Tried to touch as much as I could touch. That was the logic behind that line right there. Looks like we're coming down to it. So the big question is, are we going to fall through this area right here? Are we going to find buyers? That will be what changes for me. If we fall through, then the short city, man, just that's where we'll be looking, hands down. So we'll keep an eye on that. Right now, I just feel like I'm in this place where I don't necessarily have an edge. So anyway, let's take a look at a couple of charts here. AFRM. For those that hopped into this one, you can see we're tagging a target here, 1450. The next target down is about 1350. I did adjust these from yesterday, I think. Pretty sure I did. made some adjustments on them just after looking at the charts. So ding, we hit that 1450 area. Next one is 1350, and then maybe that 1195. Now, before we get there, it is very possible we see some sort of a relief rally. And then, of course, if we start to see some turnaround, then you want to take profits. Another one is Disney. Disney holding this one. We're not quite down to that first target of about 90. When we get there, then we'll look at that 92.20, then 86.50. Just follow price down. Move your stop down. If you're using a stop, make sure you take profits into weakness. So these are working out pretty good here. Here's a couple other charts that I think are setting up that popped up this morning on the alerts. Amazon's pulling back. And here's the problem I have with charts we're looking at today. This is a perfect example of the problem I'm having. I look at this chart. I absolutely recognize that there's a downtrend. I see it. Bears are in control overall. I understand that. Well, you know, I don't know that we just want to just don't run into a burning building unless there's really something in that building worth saving. And that's kind of the way I feel about this. I'm not sure I want to run into this burning building short or long right now until I see more information. I can see that we've got this candle here. I can see that we are pushing back a little bit. But I can also see we have this bull kicker right here. And I know my personal favorite chart pattern is when we rally from a low to a high and we pull back to the long side, that is. So I'm looking at this. I see where it might be short. I do see that. And I also see where it might be setting up for a long trade. So this is where I just feel like, where's my edge? Where's my edge? And I just don't feel I have one right now. If the market was totally tanking, that might be a little bit different. But right now, I don't feel that we're totally tanking. Tanking, by the way, would be underneath those red dots. That's where, okay, we have a problem if we get below those. Because that is the trend I use, that is the rule I use, and that's what I'm going to follow. So, like I said, I just feel like I'm in this place where, doggone it, you know, what's a guy to do? Here's a couple of charts that I liked earlier. Yeah, this still looks good. Look at Cisco here. Cisco reported earnings yesterday. They look like they're holding up. Here's 3 targets, 4 targets. By the way, let me go back to this. You know how you log in to the members page? Well, if you come over here, there's the workshop one where you get that video from last night. Come up to this one here, and you can click on that button. And I posted some charts up there that might be worthwhile for you to take a look at if you want to take a look at those in there. So members, that's a great place to go look at some charts. So anyway, Cisco here, I see basically I think if we turn the real time off, we need to get above 46.80, then we'll look at 47.50, then 48.40, then maybe 49.50 bucks up here. You can see that we've had a nice run to the upside, pulled back. We're coming back. The trendicator is trendicating for us. It's doing what it should be doing. So that's what I want to follow right there. Might want to extend that line just like that. And now we can just trade from that area up. Anything below that probably wouldn't be such a good trade there. What else do I have here? Oh, Intel was a lot of people talking about Intel. Intel is I think Intel is a beautiful chart. Absolutely beautiful. You've got a very nice trend. Very nice trend there. The chart has done just what it's supposed to do, you know, making highs and lows and highs and lows and highs and lows. Doing exactly what it should be doing. Well, it popped right up to, if you look at this area right here, it makes sense that that's a resistance area. That's right where we came to. And now we've pulled back, and we've pulled back so far to the trend indicator. So what I'm looking for the bullish side is if it can hold here, I'm going to look for that bullish candle in there, wait for the alert to give me that alert, and then we'll look for a trade in here. Above 3110, you can see the targets up here. But that's going to be the big ticket, is getting above 3110. Of course, this could be a trade for somebody, 6 or so percent, but it's above 3110 where you really start to make the money. And that's a good swing right there. So let's see here. Carol, I'm just happy it's going down. It may just be a normal pullback. You're exactly right. The market, it just might be a normal pullback. Could be. I think we need to be a little patient to step on that and, you know, step on the gas on that. But I think, like I said, we need more information, Carol. So, Carlos, I might have missed it. Did you send the scans from last? No, I have not sent those scans, and we're going to have to get the market open and have another couple cups of coffee before I get that done, Carlos. All righty, where are we here? Let's take a look at nail. I kind of like this nail. We have a nice gap to the upside on some pretty good volume. If you look at the chart over here, you've got a inverted head and shoulders. That's a reversal pattern. That, you know, just because you have that, it doesn't mean it's going to rocket ship right away to the upside. Charts do what charts do. Charts are about as wishy-washy and wacky as can be. I love price action, but I swear they're the biggest. Price action is the biggest lush in town. You can just look at any price action you want. Just as drunk as a skunk. It moves all over the place. So we look for those averages. We look for those setups. We look for compression. You know, the charts to compress and rest and give us those buy signals. Right now, I can see that we're down. We're right where I think could be an absolute perfect buy area. But we need those buyers. It looks good right now, but I'm certainly not going to touch that. We need those buyers. And it's above, we'll call it 32. That's where the trade is. It's above 32. Above 32, then we can look for 34, 37, 41 up here. So we've got to get back through that highs. Aggressive traders certainly might be looking right here. Okay. Where are we? I think we're good. Hey, again, I want to thank everybody for being there last night. And we'll talk about that more today, and I will get those alerts sent out for scanner users. So you guys have a great morning here. Go have a cup of coffee or whatever you do, and we'll see you back here in about 25 minutes, okay? Thanks, everyone.